KVB PRIME, developed for global traders, growing together with you.
Hello, welcome to KVB Prime Weekly Analysis. This week's topic is Black Swan Crisis, Gold Liquidity Crash Triggers Financial Markets. Last week, while gold market experiences a surge in prices, you also had a liquidity crisis. On 24th of March, US gold price and London gold price had $100 difference. Many trading platforms experienced trading error, surging basis points, and incorrect prices. The largest difference in basis points was up to 10 USD, increasing the cost of trading. Some providers even stopped providing bidding prices. This could be referred as Black Swan incident. The incident was due to two reasons. Number one, Eurozone lockdown. Due to the outbreak of COVID-19, US and many parts of Eurozone lockdown. Reduction in global logistics resulted in failure of gold transportation. At the same time, many supplies in Europe was considered non-essential by the government and halt producing. For instance, major suppliers such as Vocambi and Pump in Switzerland all shut down due to COVID-19. Number two, traders began to hedge buying gold due to fears of COVID-19 resulting in surge of demand. At the same time, Fed announces $2 trillion worth of stimulus package. Facing potentials of inflation, traders are more willing to invest in gold. This further increased demand. Gold factories, AG said, they are trying to increase supply as demand are 5 times larger than previous. Now let's look at what happened in 2015. Back in July 2015, there was also a black swan incident of gold. It was due to poor liquidity in Asian market and a large number of selling on the Chinese commodity market. As a result, gold prices plunged. Through historic events, plunging market prices between 9th of March and 19th of March is similar comparing with stock market crisis 1987, dot-com bubble 2000 and the GFC 2008. As liquidity risk reduces, gold prices will continue to surge. Thus, as long as we wait until a liquidity shortage is resolved, trading will be back to normal. Now let's look at weekly highlights. The weekly highlight for this week is US dollar fell 3.99%, where British pound climbed 4.08%, Euro dollar climbed 6.92%, Australian dollar climbed 6.38%, gold climbed 8.55%, WTI fell 7.21%, Dow and S&P 500 both climbed over 10%. Next, let's talk about weekly asset intraday analysis. First up, we have US dollar. US dollar had a poor performance last week. Weekly losses totaled to 4%. The short market prevented the market movement for 5 days at the resistance 100. The market had large fluctuations this month. The market is not far away from the lower support 98 and 97.5 after falling below the two support 105 and 99.2 consecutively. Traders will need to pay attention to the market tests that will happen at the two support positions this week. And the US ADP release will help us determine this week's movement. Overall, at the current price point, the fluctuating uptrend has not ended. It is slow at the key resistance position 100 as it is digesting market information and cooling down. As long as the lower support 94.6 remains strong, long will maintain its strength. Next, let's talk about euro dollar. Similarly, euro's total gain was over 4%. The market had increasing fluctuating strength on a weekly basis. However, the market is still in a downtrend channel. Intraday movement could be easily predicted through the price boundaries of the resistance 1.1500 and the support 1.0630. Once the market breaks through the boundaries, it can help us determine if the downtrend channel can sustain. Later in the week, traders must monitor the strength of the resistance 1.1240 and 1.1500. If the market cannot break 1.15, it will not dispense the downtrend channel for the past 2 years. Next up, we have British pound. The British pound had a strong performance last week. Total gains was near 7%. After the rebound last week, the market experienced a V-shaped trend. The upper resistance 1.2750 will continue to be strong, further preventing further market movements. Overall, both the resistance 1.3200 and 1.2750 will effectively prevent further market movements. This will guide the market into the downtrend channel. Currently speaking, pound has a low potential of breaking the resistance 1.32. Thus, traders must take care of the market pressure when pound surges. Last up, we have the gold. Gold prices after 2 weeks of accelerated downtrend began to rebound last week. Weekly gain total over 8.5%. Currently, the upper resistance 1,650 and the lower support 1,552 will be the two price boundaries for the market. If the market can break open 1650, the highest price point 1703 is a key resistance. Once this is also opened, traders can have high expectations over the gold market. On the other hand, if the market cannot open up the resistance 1650, fluctuating downtrend will maintain. Overall, as long as the market did not fall below the support 1,450, the overall uptrend will not change. Technically speaking, the support 1450 provide the fundamental for a high potential uptrend. Thank you for listening, and that's all for this week's KVB Prime Weekly Analysis.